Welcome to F.A.C.E, Dan. How are you?
I can hear you.
I can hear you too. I can hear you too, Dan. Thank you very much for taking the time out of the day, an hour before the NYSE opening to be with us. I hope you're on the East Coast so you didn't have to get up at 4 or 5 in the morning like I do every day.
I wake up 4 or 5 in the morning every day anyway. What can I tell you?
We beat the roosters then, Dan. So, our lives are like farmers, right? Up before sundown, asleep after. Yeah.
Yeah, I've always woken up. I've always had like weird sleeping hours. I think part of it is growing up in the markets.
Yeah.
So my dad was a specialist, and he had weird trading hours as well.
Okay. So. On the NYSE floor?
He actually had a specialist book on both the NYSE as well as the Amex. He was the last. They were the last ones to sell on the NYSE, and sorry, Amex. There was nothing to sell.
Yeah. So you've answered one of my questions. So it's a pretty obvious answer how you got interested in the markets. Having your father be a professional, fills orders on the floor, probably traded his own account as well. When did you start getting curious about it, and did you go down and spend time on the floor with your dad, and did that give you the bug?
Yeah, well, I like to say ace and quarters paid for my education, which makes it harder these days, right? No more ace and quarters. No, I spent a couple of summers, when I was 16 and 17 on the floor of the Amex. Also worked at Allen & Company, in investment banking.
Before we continue though, Dan, do you have anything you want to show on the screen? Because I'm just showing a blank screen. There is a share screen here, green box, if you wanted to show any charts once we get through.
You know what? No? I'm afraid I don't have anything specific to show you.
I'll put something up on the screen then.
Yeah. I mean, I will tell you that at Taroso, we wear a lot of hats. And this conversation, frankly, could go a lot of different directions. And that's part of the reason why I don't have anything specific to show you.
All right.
Let me spend a couple of minutes telling you a little bit about myself. Not because I got an ego, but you can pick my brain however you want, and hopefully leave a little afterwards. I don't, and by the way, I don't know your audience as well, so I think that's I need some direction here.
We trade everything, bailiwick being what spins around the dollar, FX, but awareness of crypto, awareness of stocks, bonds, everything. If it moves, we talk about it.
Cool. And can you see me at this point or no?
You have to turn on your video camera for us to do.
Why not? Yeah, we'll do that just for fun.
Okay.
Okay. So by way of background, been in the business since '87. And started off.
That was a good year to start.
Yeah, you know what, Dale? A little scar tissue goes a long way. So I definitely come from the vantage point of being a skeptic of these markets. But on the same token, where I started, I had a lot of exposure to venture capital as well. So beyond that, ran a hedge fund that was focused on small caps, basically asset light businesses, and spent some time at UBS. So I have a perspective of what the wirehouses do. But for the last 20 years, I've really been focused on ETFs. That's why they call me the ETF professor. In the ETF think tank, I work with advisors, help them, build portfolios and do due diligence on calls. As I joined Taroso about 2 years ago, Taroso's $6.5 billion ETF shop. I'm one of the PMs. We also, I heard one of your speakers talk about Bitcoin and the blockchain. We manage the largest actively managed fund in the space. So happy to talk ETFs, happy to talk blockchain, happy to talk Visa or any of our names. BLOK happens to be the symbol if you care.
BLOK is what, the fund?
That's the ETF, correct.
Okay. All right.
And I think if I had to try and take a shot at answering why Bitcoin is up and the Visa news and whether they're related, I don't think they're related, but I definitely agree with one of the comments by your team that there's momentum behind Bitcoin, and so I think there's almost gravitational pull for us to reach new highs, but it's not going to be linear. There's going to be volatility.
Okay, so I have a couple listings for BLOK. Amplify ETF,
yes,
First Trust. That's
no,
it.
No,
and this is,
it's Amplify.
Okay, and this is Taroso's ETF on it.
We're the sub-advisor, and since it's actively managed, we're the ones who pull on the trigger, and they're basically like the BlackRock. So they're the wrapper.
All right, and this is a blend of, say, Bitcoin and Ethereum and Litecoin, or is it predominantly Bitcoin?
Well, to be clear, we can't own Bitcoin specifically. So the way we break it down
is GBTC.
Correct. GBTC is a small position, and MSTR is also a small position. Not a small; it's one of our largest positions, and we're getting direct exposure. So that's roughly 8% of the fund. But since it's actively managed, we actually talk to the CEOs. So Michael Saylor is somebody I've spoken to in half a dozen times. And actually, I should have highlighted another thing that might be interesting to you. Every Thursday, we have a happy hour. We've been doing it for something like maybe 35 or 40 weeks. And we have different guests, including Michael Saylor, Michael Novogratz.
Mark
similar
Yusko.
to, we do, yeah, we did.
All right.
And we have the kind of conversation you're having with me.
Pomp
we haven't gotten yet, but we're having Ross or Tyrone Ross this Thursday.
So many millionaires have been made in everything. Let me ask you, Dan, you're a veteran. Okay. So, everyone makes comparisons to what happened in 2000. But, that was really .com specific. You could throw a dart. Commodities on fire, right? Stocks on fire, crypto on fire, real estate on fire. Anything, the everything bull market. NFTs, people spending $1 million for digital art and an original Twitter quote. Have you ever seen an environment where everything is good at the same time, except for maybe, bonds are going through a little bit of a mini bear market in the treasury sector? I have never seen anything like this.
Yeah, no, this is kind of stupid. With the exception of WeWorks might be down today, and SPACs. You have to throw that one.
Oh yeah,
too,
that
right?
Too. I mean, things that I don't even understand. I mean, I've been trading legacy markets for a long time, and even all these new products. I feel like my parents now, when computers came out and stuff, where I can't wrap my head around a lot of these new investment vehicles.
Yeah, and to your point, you got to be real careful with how you're skeptical and how you express that. GME, perfect example, right? The shorts got, really, really hurt badly, but had the correct thesis, right? So There's lots of room for skepticism. There's lots of fraud and bad stuff in the blockchain, small cap holdings, lots. So what we like to say is sometimes it's what we've avoided in block that have been our biggest wins.
Yeah, I agree with that. Sometimes avoiding the mistakes is more important than the winning and profitable trades. It's a one mistake business sometimes, isn't it, Dan?
Yeah. I mean, I forget which hedge fund it was who basically had get bailed out on GME, right? But yeah, making mistakes in this market and in any market can be really distracting and really, really super painful. And we try and be super disciplined on the amount of exposure we take on any one name. And I think that keeps us out of trouble. And if we can't speak to management, we don't buy it. That sounds like an assumption that most people would make as active managers, but it's not.
Right. Okay. So as in investment managers, is it an RIA? What's the designation? Do you take individual accounts? Or is it mainly for institutions that you're working with?
Yeah, great question. So we're an SEC RIA, right? And we've got a small wealth management book where we've got 6 planners and wealth managers involved with about 600 million of the 6.5 billion. About, I think, 1.9 billion of the 6.5 is through ETFs that we've launched, including, which would be the biggest, RPAR, which is the risk parity fund. Ray Dalio, kind of built that thesis, and these guys have wrapped it in an ETF. We also have about 5 funds associated with SoFi under that, 1.9. And then, listen, block, $1 billion too. That's a big chunk of it too. And then, we also have outsourced CIO business too. So I guess to answer your question, if somebody wants expertise in ETFs, whether they're a financial advisor, an individual, they should call me, and we'll figure out a way to work together.
Okay, I'm getting a question from one of our attendees. You have any thoughts on INVU?
INVU, I honestly don't. Let me see. Let's see. INVU. What is it?
I don't know. I just got that question asked. How about ESG? Is that an ETF?
ESG, I do have a strong opinion. We had Burton Macchio, who is one of the really anchors in the ETF marketplace, and professor at Princeton, and we had a big debate on ESG. I think ESG long term will become important, and money flows are going that direction today because the younger generation and people just simply want to do good. I think to some degree, frankly, I think that in a bull market where everything's going up, it makes sense that people try and do good with their money, right? And ESG would be a natural way to express that. Why it works is also that just by virtue of flows honing in. And my last comment on in buying the same thing, my last comment is that ESG has tended to be naturally skewed away from old oil, right, and long, the good energy space, we'll say, right? The clean energy.
Yeah, clean coal.
Yeah, exactly. So it's worked in this environment naturally.
Yeah, the only clean coal I knew of when I was younger was coming in with black all over me and using soap to get rid of it. So,
funny.
why?
I get
Yeah,
it.
why don't you? Well, they used to actually heat our buildings on the south side of Chicago that way. So, I
Yeah.
would go down and play with the coal. So, anyway, looking at what happens in a bull market in crypto,
Mm.
are they going to have any kind of? Do you think like they do on indices, any kind of reverse funds on crypto where I know the majority of people love it
Yeah.
and only want to own
Yeah.
it, but you think the ETF world is so
Yeah.
creative? Go ahead.
No, you know what? I welcome it. I think it makes sense.
Give people a way to hedge their physical in their wallets and things like that, right?
Well, and it could be done. It could be done through the miners, right?
Yeah.
Principally, in case somebody isn't real familiar with the way the mining side works, let me take a step back because we're long about $250 million, or 25% of the funds long the miners, and I visited a number of them, and they're data centers, pure and simple. Okay. And it makes sense that the miners are a leverage play, same way, GDX is a leverage play to gold.
Right.
It would make sense that if, as an example, Bitcoin goes down, the miners would fall harder, right? But here's the reason to be careful. And
Why
perhaps,
is that? Just because demand for bitcoins sets a tone for demand for the mining and creation of more of them, right? Is that the reason they would get hit harder?
well, if
What would be the reason?
the fundamental reason, which probably most people don't get, is that the miners make money off of price and hash, and hash is the difficulty rate, right? And what we're looking at on a go forward basis is that if price goes up, it's going to draw more miners into the space. So more competition is
I see.
reflected in the term hash, right? So when it gets harder to mine, you got to have the price appreciation,
All
right?
right.
And they don't work
Cost of
simultaneously.
production. Cost of production in
Exactly.
Bitcoin. All right.
Exactly. Right. So it would make sense that they would get hurt harder. But the problem today with going short on the miners, and again, I'm talking my book because I'm long, is that this industry is set up right now to do 15 to 20 billion dollars in revenue on a go forward basis, and once the facilities are set up, it becomes a printing machine, right? So with that kind of revenue, you can see huge margins, right? And there, a lot of them could go to new highs overnight, and then you've got nothing holding them down, right? New highs can become more new highs,
Right.
and the cost to borrow can go really, really high. So
Okay.
it could be a danger game.
That's interesting. That's the first time I've heard that. So that's kind of going to be the tagline from you today, Dan. It's that Bitcoin goes down, miners get hit harder. I wondered if there was anything with what's going on in the market right now. Are you seeing the use? Maybe on it would be kind of a consensus type of thing, bearish ETFs in equities, where we're approaching 4,000 in the S&Ps, and people have started to believe for the last year or so, and they've been right, that hedging is a waste of money. Why buy the puts to protect it when they just expire worthless? And I think that seems to be the sentiment. Are you seeing a lack of demand for hedging S&Ps approaching 4,000, where people just feel like, why should I even, give up a few points on even ETF when all the market does is go up?
Yeah, Dale. I mean, there are a lot of people who feel like they're smarter than they probably are today, because the market just goes up, and they don't fully appreciate the need to be diversified, right? When you lose money, that means you're diversified, and you're hedging, and nobody knows when the market's going to go down, but it doesn't move in linear fashion. But to answer your question, most of our clients, who I speak to, are financial advisors, and yeah, they're seeing some reason to be, looking for some diversification, but it's hard for them to sell it to their clients. And so I think there's a lot of complacency out there.
All right, how about some of the VIX products? I lost a ton of money in this one called TVX a long time because of the decay and the rollover. How do you tell your clients to address the decay and costs of ETFs? And some of them, reverse splits, and reverse splits are kind of like a nail in the coffin for the position. If you're going into a reverse split, you probably held it way too long. How do you avoid those? Is that part of the due diligence process before you go into an ETF, is to know whether or not it's vulnerable to a reverse split?
Well, back in 09, I when I was at UBS, I held an education seminar around them, and it was an awkward event because, quite honestly, UBS didn't want me to do it, but it needed to be done. So I had all the issuers gather together at our restaurant, and we had about 50 people to talk about it. And back then, when you bought a product that was leveraged, in about 10 days to 2 weeks, you'd get the prospectus, right? And it would outline what happens. Well, today we all know that. So I think the answer to your question specifically is these are day trading products. If you hold them for a week, fine. But if you hold them much longer than that, shame on you, because the decay will have an impact on you. Now, having said that, if you get the trend right, they actually compound better, right? But that's hard to do. I think people need to, and this is my recommendation, and I think from a financial advisor perspective, I tell everybody, don't bother, because you got to get people out when things are going bad, and then a lot of times they don't want to get out, so they're like long a week holding it. But as far as the reverse splits, I used to have these long conversations with some people who said, "Oh, it's going to zero. It's going to zero." And again, shame on them for not reading the prospectus.
Yeah, I've done that. In fact, I haven't even read the owner's manual on my car. So anyway, so is there any VIX product that you could consider it being a position or hedge against the rise of volatility? What would you say would be the best ETF to own during a period of high volatility that lasts more than a week, that could last for a period of months? Is there anything out there, Dan?
Yeah, I mean, we've got a bunch of ETFs that we use in our portfolios. But you got to know how to use them. And without knowing your audience, I'm hesitant to give specific.
Well, how about currency traders? They're all leveraged players. So these guys have blown accounts, and they've had margin calls, so they're all really the 10% of the upper end of the pyramid spec type people. I know they all have their retirement accounts and stuff, but they're used to risk. Our audience is used to risk.
Yeah, I mean, but here's the thing. I mean, to your point, the VXX has done terribly, right? We know that. And so if you were to take a position in that, you have to be super quick, right? And everybody focuses actually on the VIX, and they actually should be looking at the MOVE index as well. right? And the move index telegraphs, the volatility in the fixed income market. And we all know, right, that it's the bond market that really leads the equity market. And the Fed proved it, right? The Fed came in and put a bottom into the market back in March last year, and all of a sudden the equity market followed.
Yeah, and it was mainly jawboning and corporate and junk. Okay, so you're a veteran, Dan. You're probably younger than me. Most people are. But how do you assess the fact that the treasuries, which are supposedly the flight to quality in the interest rate arena, actually took out their COVID crash low, while LQD and junk have held up better than the quality being treasuries? Did that surprise you?
It surprises me, but arguably they're used differently, right? The one's duration and one is a coupon. So that would be my response to that. Meaning that the LQD, at least you're getting paid to hold, and people didn't sell it for that reason, right? And there's a disconnect on why people are owning TLT, right? A lot of people are owning TLT as a hedge, because there's no other reason to own it, because otherwise you're going to lose money, right? So I hope
you
that's
actually
helpful.
get a dividend yield on LQD and junk. You get a yield on that. You get paid to hold it. And I'd like to wrap it with this. So,
Sure.
Guys like Gunlich really believe that one of the biggest bubbles, and we know it because the airlines didn't have any money because they poured it all into buybacks, and corporations have been going to the debt markets for years now, and basically a lot of that has been used to buy their own stocks, so they have margin accounts on their own stocks. What would be something for someone to consider, someone like me that wanted to be positioned in case the corporate bond market came apart? Is there a good inverse ETF, bearish ETF on corporate bonds? That's liquid and you don't have to make an appointment to do a trade.
There's have you ever heard of IVOL?
No.
So IVOL is a symbol. It's a quadratic interest rate volatility ETF. It isn't going to give you a lot of volatility as a trader, but if the market craps out in the fixed income space, this should hold up fine, right? And so I would count this as a diversification strategy.
I see.
And it's run by a woman named Nancy Davis, who, within the context of the fund, which is 85% long the Schwab TIPS ETF, and the balance is trading in the volatility space.
Okay.
All right. Fixed income.
All right. Well, really, I think we covered a lot of ground, don't you, Dan? I mean, really, we did. And it's made some people thirsty. Nuno Martini. No, I know your name's Martin. Wants a link. He wants a link for your happy hour.
Cool.
If you could post it, or
do I send it to you or post it?
Right? Well, you could post it right here in chat if you want. If you see the chat.
I don't see the chat for some reason.
Okay.
You know what? You can find it on the etfthinktank.com.
Okay. etfthinktank.com. Can they find it on Taroso on the website there?
Just punch in etfthinktank.com. Okay. I see what you're showing right here.
Yeah. Okay. All right. Right there. ETF Think Tank coming up.
Perfect. There you go. And if you go down lower, you can sign up for it. But it's a good website, and anybody can reach me at Weiskopf at tarosoinv.com.
Okay.
And shoot me an email.
You know what happens when you survive an interview with me, Dan? You become even though you're really not much of a trader, you're more of an investor type guy. You're still have become my trading warrior brother.
Oh,
and
good.
and have also become our go-to guy for ETFs. I'd like to get you in the rotation for keeping us abreast as market conditions change and
of course.
what ETFs people should consider. And I really want to thank you for your giving spirit to come here and share your wisdom with us today.
Well, I enjoyed it, and thank you very much. And I know a lot of people want to get on your show because you booked me 3 months out, so there must be a
But
lot of demand.
See how time flies.
Yeah, no, absolutely.
And perception is everything.
Ah, I love it. I love that.
All right. So anyway, Dan, thank you so much for being here. It was a pleasure talking to you today. Good hunting, and may all your ETFs work out for you. Okay.
Thank you very much.
All right. That's a wrap.
See you in the happy hour.
All right. Go see Dan at happy hour. And remember, don't just count your cocktails, count your blessings. And we'll see you all tomorrow for Turnaround Tuesday. Good hunting, and thank you. See
Dale,
you,
that's great.
you guys. All right, Dan.
Thank you.
It easy.
Bye.
You could join the team for the morning edge in 15 minutes. Adios.